Welcome to the Titans of Industry show. I have with me today Trace Meyer, who was among the first popular bloggers to publicly recommend blockchain technology, Bitcoin, in its infancy with a market cap of under $2 million, well before its massive rise to $18 billion in March of 2017. He's also been a major investor in core infrastructure, including the largest fiat exchange Kraken and the largest merchants processor BitPay, which we'll talk about later. And he hosts the extremely popular Bitcoin Knowledge podcast at www.bitcoin.kn. Pleasure to have you with us, Meyer. What's going on?
Oh, wonderful. Thanks for having me, and look forward to the chat that we're going to have.
Look, we probably talked for a good hour here before the podcast, before starting this interview, because you're just an encyclopedia of knowledge. And anyone who followed what you've been doing for the past few years, with even a ridiculously low amount of money, has made quite a fortune for himself. So I want to ask you how and when you got started in cryptocurrencies.
Yeah, well, I got started. This would go clear back to the mid '90s. You know, I was involved in things like e-gold and virtual currencies and online games, and I was just fascinated with all that stuff. Plus, I was interested in the cryptography, like PGP and the cypherpunks and stuff like that. And so when I came across Bitcoin just on the internet, randomly, it clicked with me very quickly. And, I kept poking around with it and learning about it and stuff like that. And then I decided, hey, this needs a little bit more exposure. And I had a couple popular blogs at the time where I'd write about monetary and economic stuff. And so I became the first real blogger to pick up the baton and start talking about Bitcoin. This was when it was maybe a nickel to 25 cents around that time frame. And so, we've seen a massive run. This was, I think my first video about it was January of 2011. And, then we made another video. We used coins that has had over 10 million YouTube views. The website's had over 50 million views now. So, this is very, very early days. And one of the reasons so many of the libertarians have adopted and run with Bitcoin is because those are the people I initially went out and talked to. People like Jeff Berwick and Jeffrey Tucker and Lou Rockwell. And, some people liked it, some people didn't. There's this technological barrier to entry or whatever. But, the people who really picked up on it, think about it. When I first published that YouTube video, if you'd put $1,000 into Bitcoin, it'd be worth $300 million today. And so, it's just crazy the types of returns that have happened in this industry, and it happened repeatedly over and over again. I interviewed Evan Duffield on my podcast back in February of 2016. He's the kind of the first developer for Dash. It was $3. Dash was $3. It hit $120 last month. And I've had, I've talked about Ether and Monero, and, we have all our VC startup funding, our Kraken's just crushing it out of the park. So there's a lot. This is a whole new industry. There's a ton of money getting made, and there's a lot of fundamental technological innovation that's happening. And that's really what people kind of have to get their arms wrapped around and understand. It's like the internet was back in 1993, except now we're maybe to 1995. So it's still very early days, but there is so much going on, and there's so much potential with what's going to be able to get built out.
Look, I want to ask you this. In any small cap industry, what you want to do is you want to follow proven winners. You want to follow people who are at the top of their game, and if you can, either partner with them or emulate them. So who are the promising entrepreneurs of the cryptocurrency and the blockchain technology space, and what are they doing right now?
Yeah, that's an excellent question. It's actually one of the reasons that I host the Bitcoin Knowledge podcast. One of them is I'd gotten so many requests man, it would be so cool if we could just be a bug on the wall when you're having coffee with these people. And I've interviewed now about 200 about 150 the CEOs in the Bitcoin and blockchain space. So I get in there, I ask them the hard questions, I let them know that before the interview. It's like, look, I'm gonna poke you like as hard as I can, on the weaknesses or whatever. But I'm not being, I'm not in there to trap them or anything. But it's like, it's going to have to pass the sniff test. And so when I look at like all the people I've interviewed and what's actually resulted from their adventures, because some of the people I've interviewed, they're not around anymore. Like their businesses are done, which is to be expected, because when you're doing VC type work, people run out of money, they run out of funding, they can't raise another round, so that type of stuff happens. In terms of the people that have actually stayed around, BitPay, the largest merchant processor, they process for Microsoft and a lot of the other major companies that accept Bitcoin. We raised our initial seed round at $500,000 valuation. Our latest round we raised at $150 million valuation. And those guys they're executing very well. They're a great merchant processor. They've helped expand Bitcoin usability so much. Like the BitPay guys have been doing great. Kraken, of course, like we did our initial round at a 20 million valuation. There was a very in-depth valuation spreadsheet for exchanges that got posted to Google Docs, and they put the valuation of Kraken anywhere between 250 and 450 million. When you look at Kraken's volumes, they're doing about $50 million a day out of a $500 million a day market. So Kraken's knocking it out of the park. I mean, we're talking the valuation spreadsheet puts it at maybe $2 to $3 million a month of gross revenue. You back out expenses, you're looking at $10 to $15 million of net income a year. For a startup, like this is great. I mean, a 3-year-old company. So any of these established players in the exchange space, like Poloniex or Bitfinex, I mean, the problem with either of those, like Poloniex is mainly focused on all the altcoins, and who knows how much actual liquidity is there, because there's like volume liquidity and then revenue. So, I mean, we don't know exactly what's there. And Bitfinex, they've been hacked twice. They lost $72 million. You've got kind of these contingent issues there, right? But otherwise, like Bitfinex is rocking it. Like they got great volumes, great revenues. They have a very good trading interface and everything. So, those are a couple of the entrepreneurs I really like. Then you've got entrepreneurs who are working on like different applications. So I interviewed Wayne Vaughn, he's CEO of Tyrion, and they've got a contract with Philips where they're working on like healthcare on the blockchain stuff. And that's super interesting. And then let's see, I mean, who are some of the other, like Evan Duffield with Dash? I think that's a very interesting project. In terms of price, like I think we're probably going to see a correction and a consolidation of Dash. It's at like, it hit 120 last month. It's around like 60, 70 right now. I could see that going all the way back down to $10. So now is probably not the time to jump into Dash and buy that, like just wait a little while. But at the end of the day, we're seeing so much just growth and innovation and risk taking and success and failure. Like it's just so exciting, and there's so much entertainment value too, and you get to learn new stuff. You're at the forefront of technology, so it's such a fascinating industry to be in.
I have 2 follow-up questions to your answer here. First, could you talk about a little bit, if it's not too private, a few of these success stories that you've you don't have to name names obviously, but some ridiculously life-changing gains that some people have made that you've spoken with personally?
Yeah, so I mean, at least what's public out there, like I said, I was an investor in BitPay in the seed round, $500,000 valuation. Now it's 150 million valuation. Kraken, 20 million valuation to a 250 to 450 million valuation. Those are at least two investments I've made that are public. Other types of gains, I think I was on Future Money Trends with Daniel, and this was, we did the interview, and Bitcoin was about I think $12 at the time, and Daniel was pretty new. I don't even know if he even had any Bitcoin or not. But within 2 months of that interview, it ran to $266, like $12 to 266, right? Every single major Bitcoin bull market, I've actually talked about it publicly in advance. Like the one that we're in now, I wrote an article back December of 2015 saying the fourth great bull market has now arrived. Bitcoin was like $300, $400. Now it's $1,200. And the bull market's still very steadily advancing. We haven't seen any type of parabolic blow off top like we have previously. If we did, we could see upwards of like $10,000 Bitcoin if we had the same type of relative moves that we had in the previous bull runs. There's just been so many opportunities in this space to make a lot of money that it's just so fun. Every type of investor or even speculator for that matter should at least have some fundamental understanding of what's going on here. Just because if you don't, you're missing out on some serious plays.
Trace, a couple of questions. First of all, why do you think there's no a group of people like yourself and a couple of others? Why not open a fund and manage people's money inside of this space? Obviously, writing a blog gives you a lot of legitimacy, a lot of credibility. People obviously approach you. Why is this not happening yet? That's one question I have for you. And the second question is regarding what you said before, that one of the merchants got hacked for 72 million. Is that traceable? Will people who will regulate that stuff? Who will come in? Will the police come in? Will some entity come in as they would for a regular bank that gets hacked, and the FBI comes in, etc., and they try to find out who the perpetrators are and how to get the money back? What is being done on this space? This is a legitimate concern with many people.
Yeah, that's the concern, right? Like if you're trading on the exchanges, that's your single largest risk, is some type of failure of the exchange or embezzlement or hack. We saw Mt. Gox, $500 million got stolen there. And it's actually gone into bankruptcy protection, and the bankruptcy trustee has chosen Kraken to distribute the 200,000 Bitcoin. So that's kind of cool. So, you have to go with a good exchange where you feel your funds are safe, where they have good security procedures and whatnot. But even like Bitfinex, they were using BitGo, but like the way they used the wallet wasn't necessarily how BitGo wanted them to use it to be most secure. But at the end of the day, like Bitfinex issued this token, it was basically like a bail-in, and they've now paid off the token. So they've more or less made everybody whole. Not completely, because, some people sold their tokens at like 30 cents or 40 cents months ago when it happened. But that is a major risk. We are seeing a lot more regulation come into play. Like in Japan, April 1st, a currency bill went into effect that lets people use Bitcoin. The Isle of Man has passed the Proceeds of Crime Act and another act that make Bitcoin completely legit in any type of usage over there. And the U.S. is working on regulation. China has started taking more interest with their exchanges. Russia has completely legalized Bitcoin. So, all of this is very exciting. So, that's one issue. I think the regulatory issue is largely solved or getting solved. Like it's not a major threat for investors. The other question, I kind of forgot the other question. Maybe you could rephrase it for me.
Sure. Why aren't there any funds for people who want to manage?
Yeah. So like, why aren't there any funds? I've been approached about starting or running a fund, Bitcoin related fund, like a lot from a lot of very reputable people too. For me personally, and I was actually talking to a friend of mine who's done a lot of the co-investing with me, and he ran major funds, Harvard MBA, top of the game in finance, ran major funds for years and years. And he's like, well, to be honest, like I've never felt so liberated as I have like when I got out of running my fund. So, having investors, being accountable to them, that is a lifestyle choice, I suppose. I bet there's money to be made doing it. I personally, I just haven't really I thought about it, but I haven't really done it yet.
I was kind of interested why it doesn't happen as an industry, not.
In the industry, there definitely are funds. Like there's DCG, Digital Currency Group, with Barry Silbert. They've made, I think, 80 different startup investments over there. And they're invested in BitPay, they're invested in Kraken. They've really kind of, I've taken a little bit more sniper shots with my investments. They're doing much more of kind of a shotgun approach. Then you've got the Stephen brothers and Brock Pierce with the blockchain. There's a blockchain fund. They're actually trying to do like this initial coin offering where they're going to try and raise $40 million. So that's going to be interesting to see. They're also invested in Kraken and I think about 40 different companies. And I've interviewed Brock a couple times on my podcast. He's kind of fun. And then we've got RR&E, and I've talked with Jim Robinson over there quite a bit. RR&E, I mean, they've done serious like seven $500 million funds to do internet startup investing. I mean, they're a tier 1 internet fund, right? And they've switched and been making a lot of Bitcoin investments. They made a major investment in BitPay, Chain.com, like some other players. Sequoia and Benchmark, I don't think they've moved too much into Bitcoin blockchain investments yet. But, it's still very early days. 2013, we had the Senate hearings, a major speculative run-up in the price of Bitcoin. Fortress actually bought like $20 million of Bitcoin during that time. So they, now, and they were the first ones to pioneer that. So the auditors getting comfortable with like being able to hold Bitcoin as an asset, there's some accounting issues, some SEC issues around just holding the asset, let alone like investing in the companies. So, Fortress kind of pioneered that. That's 3 years ago, more or less. And now we're seeing more investment coming in, more VC investment into companies, more investment into the Bitcoin asset itself, into Ether, these other currencies. So it's only a matter of time before we're going to see a much larger fund come on the scene. I think like there's a high net worth Chinese family, and they've allocated $100 million to do VC investments in Bitcoin stuff. And Temasek has a whole blockchain group, and I actually met with the person who heads their blockchain group. I mean, Temasek manages $4 trillion. Like that's major money. Then you've got Li Ka-shing, one of the richest men in the world out of Hong Kong. He's invested in BitPay with me. So, I mean, Peter Thiel's invested in BitPay with me. So is Founders Fund. So, I mean, like the investors in the funds, they're definitely swimming around this area. It's just, I don't know that the area is large enough or that there's enough of an established ecosystem to justify them, coming in with a bunch of like Series A or Series B, Series C investments. There just aren't really enough players yet. Coinbase, they've raised $100 million. Well, they started 2011, kind of like BitPay. So we see every time the Bitcoin price runs up and then corrects, we see a new round of investment in companies. And so, we had BitPay and Coinbase. They got funded in 2011, 2012. Then we had the major run up in 2013, and we had a bunch of companies get funded then, like Kraken and Chain and a lot of these other ones. Well, now the price has run up again to $1,200. A lot of companies are getting funded. Those companies are going to mature into their Series B and Series C rounds, in a couple years, and that's going to require just a whole lot more capital than just a bunch of Series A rounds that are, 500,000 to 4 or 5 million. So, I mean, it's just part of the maturation process for the industry.
Trace, let's talk about the disadvantages of these cryptocurrencies. What stops this entire industry? We always talk about the fact that fiat currencies have no intrinsic value. It's pieces of paper, that is correct. But As long as you got a tax system, they have, when you issue a fiat currency, it has the backing of all of the tax that the government can collect from the citizens, and that's where the value derives for fiat currencies. Until there's confidence loss, etc., and you get countries to wipe out their currencies. For cryptocurrencies, what is the difference? Why cannot entrepreneur after entrepreneur open new cryptocurrencies? And basically, this will be flooded with excessive amount of cryptocurrencies, and it will be hard to understand the value of each one of them and to differentiate between them. What are the risks to an overly optimistic and overly excessive amount of cryptocurrencies, and can it happen?
Yeah, I mean, there's tons of risk, and we got like over 1,000 of these different protocols. That's a better word than cryptocurrency, and they all run different rules. They all are performing different functions, which makes them distinct and unique. And so when you're talking about a protocol like HTTP or TCP/IP or HTTPS or SMTP, we're talking about rules that computers follow in order to communicate with each other. And Bitcoin is a protocol, right? It's the first one in this group, what it enables is this transfer of value over a communications channel, but it's solving a fundamental computer science question, regarded to like Byzantine generals / Byzantine fault tolerance. And so when we're talking about solving that problem, what it does is, if we look at the internet and the way the internet's actually constructed, we've got 7 different layers, right? And each of these layers are made up of multiple protocols. So we have about 55, 60 protocols that make what we use as the internet. We had to have TCP/IP in order to have HTTP, hypertext transfer protocol, so we could go to websites. Then we needed additional protocols so we could have stuff like voice over internet protocol, so that we could have, optimized video type transfer, so that we could have stuff like BitTorrent, all these usefulness things, right? Well, Bitcoin is going to be an 8th layer to the internet, and we're going to have multiple layers within that 8th layer. Things like the Lightning Network, side chains, and these are all going to enable us to engage in figuring out a new way of establishing trust on the internet and in society in general. And then we're going to be able to do things with the actual unit itself in a programmatic way through things like smart contracts. And so, like with Bitcoin, we've already rolled out a fairly smart contract with P2SH where we're able to do multi-signature. Well, that's just the beginning. I mean, we're going to be able to do things like we're going to be able to enforce insurance ratios programmatically, like with the unit itself, any type of debt covenants, the issuance of stock. We're going to have all types of tremendous innovations that happen that come out of this, and it's going to make the economy just run so much more efficiently. So when you're looking at the risks, like, we got 1,000 different protocols out there, Litecoin, Ethereum, Monero, Trump coin, like all this stuff. But at the end of the day, do they have the network effects that Bitcoin has? And it's nowhere even close, right? I mean, nowhere even close at all. And one of the ways I like to measure that is I look at transaction fees, because that's what people are actually paying to use the relevant protocols. And Bitcoin, people are spending about $250,000 a day to use Bitcoin through transaction fees. The next closest is Dash, and people are only spending $400 a day in transaction fees on Dash, right? So I mean, it's nowhere even close. So you look at these network effects, and they have an exponentially reinforcing effect on each other. And eBay, they had one network effect, buyers and sellers, right? Merchants and buyers. They added a second network effect with PayPal. they became completely impenetrable. Yahoo threw millions of dollars trying to compete with them. So many people tried to compete. They all failed. Bitcoin has 7 different network effects, all taking place at the same time, all getting further and further entrenched. It's just like Bitcoin will be the standard for transferring value over the internet. It will be the most secure. It'll be the most liquid. It'll have the greatest brain trust. Like, if there was anything anywhere close to posing a threat to it on the horizon, like, we would see it. And then we would take whatever it does and we would incorporate it into Bitcoin, because that's how free open source software works, right? And so, like, it's very exciting, but the risks are largely in a lot of the altcoins where you're trying to supplant Bitcoin, because it can get very speculative. There can be a lot of marketing and hype, but when you look at the fundamentals, like, where are the fundamentals at? Why would this pose any long-term threat to Bitcoin? And I don't really see the long-term threat being posed by anything out there on the horizon. And that's not to say that I don't like altcoins. I mean, they're fun. There's a lot of experimentation happening there. But at the end of the day, like, if you're going to buy any particular asset and hold it for 5 years, Bitcoin's pretty much a no-brainer. That's the one that you buy and hold for 5 years, because it'll most likely be still around and worth a lot more.
Trace, this has been a great interview. I want to have you on for a follow-up interview very soon to talk about blockchain and what's going on in that technology, in that industry. So I'd like to thank you very much for doing this. And, everyone, please check out bitcoin.kn. It's an amazing podcast and blog. You got the top people from the Bitcoin industry and around this protocol cryptocurrency sector. And thanks very much for taking the time today, Trace.
Yeah, glad to be here. Anytime.
Thanks for taking the time today to tune in to our cryptocurrency series. Trace Mayer is one of the industry insiders and has taught us a lot about what's happening in the crypto world. I'd like to take a moment to let you know that big high-tech companies, major banks, large multinational companies, public ones, and cutting-edge entrepreneurs are spending time and money and considerable energy and effort carving out a blockchain future. Well, this is more than just the cryptocurrencies here. Blockchain is a breakthrough disruptive technology. And just like the internet, it wouldn't matter if you're actively making the effort to understand it or not. It will, no doubt, impact your life. But the question is how and how much. For the moment, it's important to learn the utilization of Bitcoin, both as a trader and as a speculator, to the best of your ability, so you can become more familiar with what's going on in the space. Our exclusive report details the Bitcoin phenomenon and also features 2 new cryptos which are exploding at the moment and deserve a close look from you. Go to wealthresearchgroup.com/Bitcoin. Thank you for watching, and join us again. We're planning on releasing 1 Bitcoin interview per week, so you can stay tuned. You can build yourself with this, and this is definitely something that you want to take a look at this particular point. Bitcoin is not going to fade away that quickly. It might even not fade away at all. People are using Bitcoin to move money across countries. It's a medium of exchange that is picking up a lot of pace, and it's definitely something that you want to get involved in.